Hey everybody, this is Rick Riegler at Mohave Mortgage. Today we're going to be talking a little bit about Veterans Administration guaranteed loans, otherwise known as VA home loan financing. If you're a veteran renting in Arizona right now, you may not realize that the purchase of a $400,000 home can oftentimes have less of a monthly payment than what you're paying in rent right now.
Today we are breaking down the VA loan specifically, and we're going to talk about 5 key components that are really important for you to understand and delineate this really special product that is available to all of our veterans, right?
Absolutely. And
Okay.
you know, we work very, very hard at putting more people into homes. We rarely take no for an answer, and sometimes our underwriters don't appreciate us for that, but that's what we do. VA financing is one of the most powerful tools that we can use to put more people into homes. And most importantly with that is, it's something that we owe our veterans. They signed on the dotted line. They were willing to protect us. Now it's up to us to protect them. The first benefit that we often like to talk about with VA financing is, of course, zero money down.
Right.
And no money out of pocket in a lot of cases when you combine a couple of different tactics. So no money for a down payment. We have ways of getting closing costs covered, but the most important part is that you don't have to have a 20% down payment saved up.
Next up is there's no PMI. Can we talk a little bit about what PMI is and how that works?
Absolutely. So in most loans, when you've got less than 20% down, there's a certain level of insurance that's required. The lender requires it. So in conventional lending, with less than a 20% down payment, you're going to be required to pay a certain amount of private mortgage insurance, or PMI. Veterans Administration financing is amazing in that there's a mechanism that allows the mortgage insurance component to be removed so that it doesn't affect the veteran's monthly payment. And that's an amazing benefit because that increases qualifying as well. And since we're talking about qualifying, that kind of leads to the next point, in that Veterans Administration qualifying for back-end debt ratios, knowing that a lot of veterans are working on a fixed income, are very, very liberal. It's another tool that we use and we dig in deep on to get more veterans into homes.
So if you haven't met us before, we are Mohave Mortgage. We are a home lender here in Lake Havasu City, Arizona. That is our headquarters, and we specialize in all different types of loans all throughout Arizona. So here's an interesting one, is now we're going to talk about eligibility, who qualifies. I think this is really interesting to me because there are a lot of veterans out there, or spouses, etc., and they don't realize that they actually qualify for this loan.
So we do that. It takes about 20 seconds. We sit face to face. We log on to the VA website. We check your eligibility right then and there. And I have yet to find any case where a veteran that I've worked with didn't have an entitlement that was pending or waiting for them to use.
Really?
Yeah, there's only severe cases where you were dishonorably discharged for something really, really not great.
Yeah, okay.
But
for the most part,
it's got to be pretty bad before
something, right,
before
right.
Uncle Sam's going to abandon you on this. A husband and wife, a veteran, either one of them being a veteran and the other not being a veteran, can qualify together. So you can use the power of the combined income to afford more home. You might have 2 veterans that are not married, but they want to buy a house together. It
Okay.
happens. As long as they both have their eligibility. Each one of their eligibility is accounted for in the VA guarantee for this home loan financing. And you have certain situations where a surviving spouse can qualify for their veteran spouse's benefits if they've never been used before. Active duty or reserves. Reserves are entitled to that benefit as well. Those that are separated from the military, it could be from any branch of the service. It could be from the Coast Guard. It could be from the reserves. National Guard typically have some sort of an entitlement that they can use under the VA guarantee.
Oh, okay.
So now there are certain individuals who've separated from the military with what's called a service-connected disability, and that leads us into a conversation about the VA loan guarantee's funding fee. As we're speaking about who's eligible and how we find out or determine that eligibility, we pull the Certificate of Eligibility from the VA website. There's another little piece of information on there on whether or not the veteran is going to be subject to, you'll hear this word, funding fee, VA funding fee. And that is a form of pool insurance. Now, it's based on a percentage of the loan amount, and there are many, many veterans who have been, who have severed service with the military based on a service-connected disability
Okay.
or some sort of a condition,
I
that
see.
the VA will actually waive that funding fee.
Oh, really? Okay.
But because it's something that you're going to come across typically in the process, it's worth mentioning that most funding fees, if they are assessed by the VA, are just added into the loan balance. So it becomes a very, very small portion of your monthly payment. Then we can run all of those scenarios and how much that affects each individual case, because it varies based on whether or not you're putting down payment, how much you're putting
Right.
down, and whether or not this is a first use or a subsequent use of your VA eligibility.
Final key component to talk about is the seller concessions.
Right. And that's where we get creative. And this is where what we do gets really, really fun, because we come up with solutions again to sometimes what can be challenges in a veteran borrower, veteran buyer who's being confronted with paying closing costs. So we have a couple different ways that we can deal with that. In a lot of VA situations, and people have heard the term VA no-no. That means VA, no down payment, no closing costs.
Oh, I did not know that.
Absolutely.
VA no.
Yeah.
Oh, that's a new cue card.
It
VA no.
It really doesn't get used a lot, but it's
Hashtag VA no.
yeah. I love it. If there's closing costs involved, and typically what we're going to do is we're going to ask the seller in the correct market if they would help the veteran out by paying the closing costs.
Okay.
If the seller's not willing to, or just they don't have the room in their net return on the sale of that house, then we have another little strategy that we can employ, and where let's say that you're buying a $400,000 house and there's about $6,000 in closing costs. We offer $406,000, and then we ask the seller to contribute it back to the veteran so that they can actually finance those closing costs. $6,000 financed over 30 years is going to be about $45 a month difference in your monthly payment, but at least you don't have to come up with that $6,000 out of your pocket.
That's right.
The seller's net ends up being exactly the same. That zeroes out, and the veteran moves in with not a dime out of their pocket.
It's just awesome. And as we're talking about these things, and we do this every single day, and we want to make sure that this information is delivered to you in a way that you can understand it. We don't want to get too deep into the soup, but at the same time, we want you to be informed. We want you to know that we're here for you.
Yes, this is what we do. Not 9 to 5, Monday through Friday. It's 7 days a week. Our partners are out there working Saturdays and Sundays, and we're there to support them. Anything that we can do to help a veteran get a roof over their head, something to call their own, and start building wealth through real estate. There's so many rewarding factors to this process. Come in and talk to us. If you like this video, make sure to hit like, subscribe, and pass the word.
Nice job, Rick.